Hey everyone, Calvin here. What's new today? You probably have read from the newspapers that Canada's inflation rate has increased to 6.7% in March. That's March this year compared to last year, 6.7%. If you compare this March price with 2 years ago, it's totally possible that we already passed 10%. The inflation right now in April most likely is more than 6.7%. I'm pretty sure about that. And I think it's time to negotiate your base salary. If you look at big companies, they're making record high profits, at least up to last quarter of 2021, due to huge print of money and spending of money by those who receive those free money, right? Like those tech companies, Amazon, Microsoft, Facebook, and all that, and big banks. But have they shared the profit with you? They probably have shared the profit with their shareholders, but probably not with you, employees. And I think it's time to ask for pay raise. We're not trying to get bigger bite. We're just trying to keep the buying power of our salaries, right? If the inflation is rising, 7% every year and your salary is only rising 2%, the buying power of your salary is eaten away by inflation. It's eroded by inflation. You have to negotiate for more. Otherwise, bread price is increasing, the veggie prices are increasing, the rent is rising, and you're squeezed between it. It's time to negotiate for higher salary. If you haven't done so, you should be thinking about it, at least. You can use this inflation news as a leverage. You can tell your boss that, hey boss, inflation has been eating away my salary, real buying power, and I want to at least keep the real buying power of my salary. Would it possible to increase my salary by, let's say, 7 to 10% just to keep up the inflation? Not only just to keep up the inflation that already occurred, you probably ought to want to include upcoming inflation as well. We're all pretty sure that the inflation will keep rising until some time. I know that the Bank of Canada and US Fed has increased its interest rate, but it's going to take a while to take effects. They have to keep increasing its interest rate over the years to keep the inflation down. And of course, they have taken other monetary policies as well. Those policies you don't have to understand. They're just decreasing the amount of money available in the market so that the inflation should be kept down. So it's time to negotiate for higher salary. So what else are new? Netflix has dropped about 37% today, which is not surprising to me because, Netflix, although it's a dominant in the industry, it has to reach its plateau and then go down. In the early period of pandemic, people started staying home and started watching videos, watching movies and films on Netflix. So there are a bunch of people subscribed to Netflix. And then gradually people realized that, well, this is going to last very long and we can't just keep watching videos for however long the pandemic will last for, right? If the pandemic is going to last for 10, 20 years, are you going to watch Netflix for 10 to 20 years? No, you gotta go out, jog, you gotta exercise, you gotta lose weight, you gotta have a healthy routine, right? So people started, okay, I'm gonna do some discipline to myself. And a lot of people started getting used to this new norm, staying home without watching Netflix. That's why Netflix lost a lot of subscriptions. People started unsubscribing Netflix. That's why. So I think Netflix has reached its ceiling and it's no longer going up, at least in the foreseeable future. That's why it dropped 37% today. The question is, should we buy now? Netflix? It's still a profitable company. It's the dominant company in the industry. Should we buy it? For me, I wouldn't buy it because they don't pay dividends. Why would I buy it, right? If they're not sharing their profit with their shareholders, why would I buy it, right? Shareholder is the equity owner. Equity owner is the owner of the business. And if you're not sharing the profit of the business with the shareholder, then this business is managed by the managers for the managers. It's not for the shareholders, not for the equities. So I wouldn't buy this business. I wouldn't buy their stocks. Warren Buffett always taught us that, when you buy a stock, you have to think as if you are buying a whole company, although you're only probably buying a few stocks. That way, you'll know which business to buy. That actually excludes about 90 to 95% of the businesses, if you think about that. If you want to buy a business, if you want to buy a farmland, you have to buy a profitable one. Which are the ones that are profitable? You can tell them them by looking at their finance sheets, right? Those ones that are profitable usually pay dividends, and they have potential to grow. That's why I kind of like fixated on those businesses that are paying dividends. And I wouldn't buy any businesses that are losing money, that are bleeding, because first, who knows, they're going to bankrupt tomorrow, right? As the inflation goes up. If the inflation goes up, then these businesses living by borrowing is probably going to go bankrupt. If their borrowing cost is going to increase, they probably can't survive. That's why there are a bunch of terrific businesses in the world that you can consider. I use Yahoo Finance screeners to screen for myself. I do that once in a while. It's really helpful. I find several amazing companies. There aren't many amazing companies, I'll tell you this. There are more amazing companies during the time when the stock market is not doing well. There are far few great businesses that you can buy during the time when the stock market is hitting the record high. So I would still stick to value investing. I'm still a student who's learning value investing. There are a lot to learn. I'm really new, but I think I'm doing pretty good. At this time, I'm not losing a lot of money. You know, everybody has to lose some money in the stock market. Even Warren Buffett. Warren Buffett losing money doesn't justify I lose money. So Netflix is a great business, but it's not sharing its profit with its shareholders. That's why I don't buy it. That's why I don't buy it. There are a couple of good businesses I have identified, but I can't buy them because their stock price is huge. That's a couple of things I found interesting today, and I hope you found interesting too. Personally, I think buying non-productive asset is speculating. Some stocks are non-productive assets, and I personally think that those stocks who don't pay dividends are non-productive assets. The reason those people who buy the stocks of companies who don't pay dividends is because they're hoping that someone else would pay them higher price in the future. I myself kind of started disliking that. I started liking those companies who pay dividends consecutively. Ideally, their dividends will increase over time. You know, if you own a farm, you wouldn't keep your farm there forever. You have to find someone who would grow crops on it and share the profit of the crops with you. You probably want to rent out this farm to someone. Those who rent your farm, you know, should share their profits with you. So same thing with stocks. If you want to buy a stock, that stock is not giving you dividends, I don't buy it. That's all I want to talk about today, and let me know what you're thinking by leaving the comments down below. Don't forget to click the like button below and smash the subscribe button if you haven't. Thank you very much. As always, I will see you next time.